Hello, this is Seewing Yee. Welcome back. So my question is, Florida housing market really crashing? Well, according to a lot of YouTubers, according to a lot of those crash bros, doom and gloom videos out there, yes, that's what they're saying. They were saying Florida housing market, there are 1,000% more inventory. Housing is going down the toilet, is crashing into the ocean all over Florida. Housing crash is going to crash by more than 50 to 80%, just like 2008. All I can tell you is I do not have a crystal ball. It was broken a long, long time ago. But I'm going to share you some data as objective as I can show you. I'm going to use the Redfin data. Redfin, they're not perfect by any means, but as of this moment, that's all I can share you based on my analysis. And then when you finish with this video, you can make your own decision whether you are an owner occupied buyer or whether you are a real estate investor. Then you could really truly understand coming from real data, not inaccurate, misleading, overhyped data out there of YouTubers and social media. People just want to get the negative headline, clickbait, and doom and gloom because people are preying on people's fear. If fear-based reporting is unethical, I would say it's illegal and it's just downright bad. All right. So with that said, let's dive into the Redfin data. I have identified 4 major metros in Florida. I will do a quick high-level deep dive on all the important numerical metrics. And the markets are Miami, then Cape Coral, Southwest Florida in the Gulf Coast area, then Tampa, Florida, and Orlando. And then when I finish with the data, then again, I'm not going to make any kind of prediction. That's not what I do. But suffice to say, I've been investing in Florida, buying rental property in Florida for more than 20 years, all over the place. And hundreds of our investors have purchased cash flow rental properties in Florida for all these years and decades. And we are still buying in good locations away from all the negativity, away from hurricane areas. We're not buying cash flow properties we're not buying condos. We're not buying any high HOA fees areas. We're not buying older type of condos to 20, 30 years old because obviously they are unable to meet the safety codes in Florida. We're not buying in the coastal markets. We're not buying in a flood zone. We're not buying with a high insurance cost. In fact, our insurance premium are very average, very low. No flood zone, not coastal markets, away from hurricane areas. We're buying brand new constructions, which meet all the safety standards for insurance purposes. So everything, and we buy in a very specific sub-markets, emerging market deep inside Florida. That's an ideal place to buy. So there are still opportunities in Florida. We'll continue to do so because Florida is the fastest growing state. More people have migrated to Florida than any other 4 states. So just because of this short-term negative headlines that we've been seeing, the sensational negative reporting, it doesn't mean Florida is crashing. Okay, I know there's some challenges, of course, as I said, but don't have this short-term vision. So with that in mind, let me share my first video, which is, I'm not going to talk about Miami too much because Miami is a very unique market. Why? Because Miami is the playground of the rich and famous. It's a playground of multi-millionaires. It's a playground for billionaires with a B, Jeff Bezos, Elon Musk, Richard Branson, all the multi-billionaires, they own properties in Florida, Donald Trump. The list go on and on. If you look at all the high-rise condos in Miami Beach, in Fort Lauderdale, up and down South Florida, we're talking $10 to $20 million condos. We're talking $40 million single-family homes along the Atlantic coast, up and down the coast, and even into Gulf Coast, Florida as well. So, look, those millionaires, those people with deep pockets, even people that are regular millionaires. They're still buying Florida just because all of a sudden hurricane exists in Florida for centuries, okay? Just because of this short-term negative headlines around HOAs and insurance costs and whatever. doesn't mean it doesn't mean there's a mass exodus. In Miami, again, there are people with big bucks are buying Miami. So I'm not going to spend too much time in Miami because they are still, the median price of Miami, as you can see, is still continue to skyrocket. Year over year, 9% growth from year 1 year, 10 double-digit appreciation, triple-digit appreciation, and still high rising because simply everybody in the world are coming over to South Florida. Multi-billionaires, everybody from all over the U.S. or Canada and South America, and it's an international country. There are more companies, there are more Wall Street firms located in South Florida than there are the actual real Wall Street and Lower Manhattan, New York. Okay? So, anyway, I'll conclude the Miami scenario. Let me see. Even active listings are decreasing in Miami. So, again, it's a very expensive market. So, obviously, the mom and pop investors do not come here because it's very expensive. Okay, that's all I have to say. Even though the weeks of supply is like 4 times 7 months, 7 months supply of inventory, and yet prices are not going down Miami. So I'm not going to talk about Miami that much because most people cannot afford to come here to buy here anyway. So unless you have at least $1 million of cash, then you'll buy. Maybe you'll buy. I would not, right? It's just too congested. It's too volatile. You cannot cash flow unless you put 70% down payment on a house in South Florida. Then you might cash flow, right? So anyway, that's it for Miami. So let's do a deeper dive in Cape Coral, like Cape Coral, Southwest Florida. A lot of people are dishing on Cape Coral and all the doom and gloom videos come out. Yeah, there's a certain element of truth to it, but let's go a deeper dive in Cape Coral, which is we still have investors buying in Cape Coral and in the inner suburbs of Southwest Florida, especially Lehigh Acres and LaBelle. Those areas that we are focusing on, no longer in Cape Coral because Cape Coral is getting too expensive for the most part. You're very hard to cash flow with 25% down payment. You might cash flow with maybe 50% down payment perhaps. But then again, with 50% down payment, I'd rather buy 2 properties somewhere else at 25% down payment than buy 1 rental with 50% down payment. That goes without saying. But Cape Coral new listing has going down. It's been going down. So therefore, the initial hype of massive inventory has begin to die down, especially when the spring buying season is gone pretty much. Yep. So we have less new listings year over year than the past 3 years. Pending sales, probably the same thing. See who it is. There are less pending sales closing year to date than at any other time since the beginning of this year. Minus 16% less closing pending sales. And then median sales price is a very important metric. It's pretty much stabilized. I have not seen any reduction of value really. 3% year over year less in median sales price. I wouldn't call that a crash. I wouldn't call that a correction. So far, the home prices is stabilizing, especially when you compare to 2023 and 2022. But as you can see, back in 2021, the property have skyrocketed from 2021 to 2022 to the tune of 28% appreciation from 2021 to 2022. But then from 22 to 24, the last 2 years has been stabilizing, right? And which is not all that bad. All right. Now, the next metrics, active listings, is all very important. I know active listings, at the peak of the active listings, year over year, we're talking 11,000 active listings back in February and March of this year, 73% rise from the previous year, 2023. Just so you know, okay, hear me out. 2023 has been the lowest amount of inventory in history in the past, I don't know how long, 30, 40, 50 years, give or take, whatever. So when you compare year over year in terms of inventory availability and listings, you have to take it from you have to put things into perspective. Even though it's 70% year over year rise in active listings, seems very significant rise, skyrocketing rise, but you have to compare the historical data. If you compare, for last year has been the lowest transaction ever in history. So don't let this 1 year short-term change, not only in Cape Coral market, in any market, for that matter, this dramatic inventory change, you have to take the data from its perspective. Unfortunately, Redfin can only go back to 2020. If I need to provide data, before the pre-pandemic, what is the historical comparison between active listings today with the Cape Coral or any other market compared to 2019 or prior? Then we have a better gauge as to how the inventory adjustments could impact a particular market. Does that make sense? Hopefully it does. So the good thing about it is in Cape Coral, Southwest Florida, the active listings has gradually came down in the past few months. It's a trajectory gonna come down lower for the rest of this year, keep on getting lower or stabilizing for the rest of this year. Then is healthy market. Is what I mean by that. I'll share that with you. So again, medium sales price is down slightly, but it's not something to be concerned with short term. And then the few other metrics like months of supply, yes, months of supply. At the beginning of the year, there was a tremendous amount of inventory, a lot of supply. And now it has come down quite a bit in the last few months. So right now it's at 26 weeks of supply. If you divide by 4 weeks per month, 4 divided into 26, around 6.5 months supply of inventory. In case you are not aware, the balanced market equals a balanced market is between 4 to 6 months. Right now is at 6 months. As of June 30th of this year, 2024, is slightly on a buyer's market. So slightly on the upper end of the healthy balanced market. So supplies are a little bit more than the available demand, right? Even though the mortgage rate has come down to almost 7 this past few days, according to the Mortgage News Daily. So 7% is not too bad. All right. Yeah, it's slightly buyer's market. And finally, I want to mention average sales list price is at about 96%. So the final list price is selling at 4% below the initial list price, the reduction of price. There you go. That's Southwest Florida. If you have any questions about Southwest Florida, if you live here, comment below. See what do you think, what's going on in your local neighborhood, in your local market. All right. So with the third market we're gonna go into is Orlando. Let's look at new listings. Orlando. New listings are 14% higher than year over year. So it's doing okay. So Orlando is, let me see what else. Pending sales. Okay. Again, it's the lowest pending sales in the past 3 years, 6% less than the previous year. And then the medium sales price, very important metric, is going higher, is 2% year over year higher. So as you can see, the medium sales price has increased year over year ever since 2021. In 2021, the price have skyrocketed from 2021 to 2022. We talk about 24% average median price increase during the housing boom a few years ago. Now it's still going up. Okay, 413,000 medium sales price in June 30th. So far, so good. Nothing to be concerned about. Let's go over active listings. Again, still elevated, still going up a little bit. Consistently has been going up ever since the beginning of the year at 10,881. Now is at 12,000. So there's a little bit of concern in Orlando, 50% year over year increase in active listings. So with in the next few months, we'll find out if the active listings continue to go high. That means is housing prices could come down a little bit. It all depends. The spring, the seasonality is pretty much over. We are entering the summer. And we're going to enter the winter in the back end of this year. So normally the winter time the listings or is lower, housing prices come down. It's all seasonality. So this trend's a little bit of a concern. I wouldn't draw any conclusions yet, but it's still active listings still elevated. And also, let's go look at months of supply. Is all about economics 101. When demand is greater than supply, then it put home price up in upward pressure. Now is at the weeks of supply, they're 15 weeks, so divide by 4 into 15. So we are right below 4 months supply of inventory. Again, a balanced, healthy market is 4 to 6 months. Right now, at the crest of the 4 months, so still a slight seller's market, right? So there are more demand than there are available houses available. Agree? We don't know. The trend is pretty much stabilized, looks like, right? So we'll see next few months. But right now is still a seller's market here on Orlando. So some of you may be surprised by it. Now we are concluding with of course, one thing that I failed to mention, with all the Florida markets, I believe, price drops, okay? Price drops usually are higher in most Florida markets than the previous 3 years, even though I'm not going to go back, okay? So in all the Florida markets, I have to believe, even though I didn't go over the one Southwest Florida, Cape Coral, but Tampa, all the major metros, I have to believe that the sales drop has been elevated for obvious reasons. In this case, here in Orlando is 8.4% of active listings with price drops, increase of 2.5% year over year. Okay, that's with to monitor that situation. So Orlando doing fine, is stabilizing, nothing to worry about. Seems like still a slight seller's market. Active listings are still doing pretty okay. Let me review that one more time. But yeah, it's still a little bit elevated. So we'll see if it continues to be elevated a few months into this year, then there might be a cause for concern. But right now, it's too early to tell. And finally, we talk about Tampa. Tampa is the last metro we're going to cover. That should be enough for you to have a big picture understanding of what's going on in Florida, right? Because these are the major metros in Florida. All right, so let's go over the last but not least. Let's go over Tampa. Tampa right now, new listings is at 13.4% year over year, higher than last year at 1613. So, but lower than the previous 3 years. And then let's go over the pending sales. Pending sales again, once again, no surprise here, is lower than the previous 4 years. So homes are staying longer in the market compared to the last 3 years. Compared to the historical record, we don't have the data from Redfin at least. But I have to say, even the pending sales is probably below the pre-pandemic level. All right. Again, I don't see too much concern here. Let's go over the medium sales price, a very important metric. And the medium sales price have been increasing steadily ever since the beginning of the year. So it tells you that there are more demand than there are supply year to date so far in Tampa Metro. And the medium price have increased 4% year over year to the tune of a medium sales price of $391,000. Okay, so that seems to be good. And active listings, very important also. Again, it has been elevated. It has been increasing 60% more active listings than past year, 2023. I had to repeat this once again. This 60% elevated increase in active listings seems like a real huge jump. We have a very narrow areas to compare. This is not an apple-to-apple comparison on a historical basis, because last year, 2023, active listings there's a sales transaction crash in the U.S., not just in Florida. So we have a very low historical active listings in 2023. So do not, all the crash pros out there, all the doomers out there, they like to emphasize this huge increase in inventory, causing excessive inventory and causing home prices to crash. That's not the case, at least just not yet, based on the Redfin data. Do you or do you not agree with my assessment, my objective assessment? Please comment below what you think. If you live in Florida, you know your local market. I would love to hear from you. So what are your thoughts? What's happening in your neck of the neighborhoods? Because real estate is very local, down to the sub-local neighborhoods is just very distinct. Okay, so that's active listings, and let's look at months of supply, another very important metrics, and 15 weeks of supply divided by 4 weeks per month, 4 divided into 15. So it's not even 4 months supply of inventory. Again, 4 to 6 months supply inventory is considered a normal market. Right now, we are right at below 4 months supply. So still, we're at a seller's market. Still, demand is greater than supply. Economics 101. Okay? Has a little bit of uptick between May and June of this year in terms of supply inventory, but we'll see. We have to track it like we do all the time anyway. And finally, average sales to list ratio. Homes are selling at typically around 3% less than the initial list price of homes. So lower than the previous 3 years, but not real significant. Okay, so my takeaway is, what's your takeaway? My takeaway is that it's too early to tell. A lot of people dish on Florida for clickbait reasons. The doomers out there, they have a field day getting the clickbait headlines so they can get more subscribers. They have they are sick, okay? They are idiots out there. The YouTube crash bros out there, the doomers out there, they just total idiots. They report very negative information, very misleading. They're misleading a whole bunch of people out there, which is we live in a very sad, unethical world, especially around the housing market situations. Okay, anyway, so that's my takeaway, right? I don't see no crash yet based on the data that I reported. I'm being objective as I can. Who knows in the future, right? It all depends on a lot of variables. Depends on the mortgage rates. If the mortgage rate remain elevated, we could see a lot of freezing of the housing market, a lot of paralysis and all that. But if the mortgage rate come down fairly quickly, then game changer. Things will change. So we don't know. So anyway, at the end of the day, the recap is, if you have received any value from this video, please like and subscribe to my YouTube channel. And also comment below, see what you think about my analysis, and I'll be more than happy to answer them. And also put your email into our email inbox below so you can receive emails of real estate investing information free of charge. You can become a free member of our network, of our real estate investment club, if you will. So every day you will see a lot of real estate topics, not only on the general housing market updates that I provide here to you guys, but also real estate investment in opportunities and news, so you can become an informed owner-occupier buyers and informed real estate investors who's trying to buy turnkey cash flow properties, in which we talk about a lot. Right? Thank you so much for watching. This is Seewing Yee, and I will see you on the next video very soon. Have a nice day. Bye-bye.